Hello and welcome to this analysis of Taj GVK Hotels. Taj GVK was incorporated in 1995, a joint venture between the GVK Group and Indian Hotels. And it's a small cap company. They have three five-star hotels in Hyderabad, one five-star each in Chennai, Chandigarh, and Mumbai. And they're coming up with a new project in Yelahanka, Bangalore for 255 rooms, and which would be completed by May of this year. The market cap is 2,343 crores with a return of equity of 18.4%. Trailing 12-month PEG ratio is at 5.2. Piotrowski score is at 8, which is quite decent. It has reduced its debt in the last 5 years, and a CAGR of its growth is at 30.6%, which is phenomenal. The only issue in the fundamental part which I could see was that there is seeing the company is seeing a declining net cash flow in the last 2 years. Promoter holding at 74.98% of that. The Indian Hotel Group, that is the Tatas, hold 25.5%. FIIs hold a very small 0.70%. Domestic institutions 2.98%, public 21.34%. So most of the stock is in the hand of the promoters. Among the non-promoter large holdings, there is Damani Estate and Finance at 2.4% and Quant Small Cap Fund at 1.3%. Now let's try to understand what the charts are suggesting to us ahead using the Ichimoku multi-time frame study. Now you can see from the listing out here, from all the way 2000, a small dip due to the dot-com bubble, and then from 2003 a nice strong rally for 3 years. Then from there some sideways volatility continues. The main true outperformance of the stock came back in April 2020. So that's a lengthy period, of 14 years of more or less sideways underperformance of the stock, more sideways and underperforming. And then we see a large move on the upside. Huge breakout took place in the month of January, the January quarter. January to March quarter out here, you can see that's a large 67% gain from 225 to all the way to 400 up on the up and closing at 380. The quarterly chart suggests a major support now at 245, where this massive breakout has taken place for the stock. Remember, after a period of 14 years, 14-year period of breakout. Let's look at the monthly chart. In the monthly, interestingly, if I just switch off the Ichimoku for a second, you can see that there is a channel. Now, channel movement, this entire sideways move, which took started probably all the way back in 2006, we can see a dip till the subprime low of 2008, and then this rally up down till 2010, then a dip down to 2013, and then the 2018 high, where basically most of the mid and small cap stocks topped out for a period of 2 years, and then again a dip, which is the COVID lows. From there, a small steady rise, always making higher lows and higher highs all the way till December 23, and then the sharp move which came up. Interestingly, look at the channel. This channel high, which was formed from June 2010 all the way to April 18, has been broken on the upside, both in the quarterly and in the monthly charts, and it has managed to close above the channel breakout level, even if its all-time high of 288 has been taken out even on a closing basis. Now, where is the monthly support? As per Ichimoku, the support is at 300, and then a big one at 265. If some by any chance it does not hold 265, the stock could decline down to 180 in that case. Let's look at the weekly charts. In the weekly charts, you can see more of a sideways after this channel breakout on the upside. We're seeing the stock going a lot of sideways out here. The weekly support is at 330 out here, and then below that 300, and then all the way down to 245, which matches with both the monthly and the quarterly charts. Let's look at the daily time frame and try to see where the support is. Here you can see the probability of a double top, too early to say. what we saw in the weekly sideways, to if it this is a double top, then the double top confirmation will only come if it fails to hold 330. Then it pushes its way down, yes, to 275 to 245. So 330 and this 360 level are crucial support levels for this hospitality industry stock, Taj GVK. Now, the other thing is that this could also be a triangle taking place in the daily time frame if it is a sideways scenario, not a double top in that case. But in either case, what I am seeing at is that if I were to buy Taj GVK, I would, one, if there is any decline down to 330, 310, I would start my accumulation in that zone on the downside and get very aggressive near 245 in that zone if it comes, if there is some due to any reason the stock sees, because then then it would be a retest of what we saw out here in the breakout of the monthly near 265 odd level. So 330 downward onwards, I would start my accumulation all the way down to 260 to 245. Yes, it can go down to 180 like that, but then that we cannot time such stocks to to the maximum specification when we are looking at a very large time frame. And also, like I said, that this is a 14-year sideways breakout that we are seeing in the stock, so you need to give it some time. And in terms of Ichimoku price and time theory, there could be a lot more on the upside for that case, so hence looking to add on the downside. However, if it continues to rise like this, what we have seen in the month of January, February, March was a very dull month, a doji candle, and April has just started. If it starts to continue to rally on the upside now itself, doesn't, supposing the sideways correction is over, then in that case, there is an Ichimoku price theory target where it has come and paused 380 level. So I would look for at least a weekly close above 380, and then on the upside start looking to buy. It's closed at 373, so wait for a weekly candle close above 380. In that case, the upside continues to push in its way up, then I would look for a daily close above 415 as my next trigger. So these two levels on the upside where I would like to keep adding the stock, 3 and above 380 weekly or 415 daily. Then the upside minimum ideal level goes to 490 odd levels, and then probably another 100 bucks more towards 600 odd levels also possible. So, and of course, one should keep in mind that, again, I would repeat the emphasize on the fact that it's a 14-year breakout what we are seeing in the quarterly charts out here, which has taken place. So I would not get too, what do you call, like to leave this stock very early. Yes, trading purpose, we could be looking at probable level where yes, we would like to book some profits. But as an investor, looking at a larger time frame, I would like to look at this stock from a much longer time frame, at least 3 to 5 years to a probably even lengthier period of 10 years, the way it has come out of that kind of a sideways consolidation. So overall picture looks very good for the stock. Maybe some weak hands might be flushed out in this zone of 370 to 270, or it might take a lot of time to consolidate in that zone, which is okay as an investor. From an investor's point of view, from a trader's point of view, no, I would like to wait then before to be aggressive, like I've explained. I hope this video is of help to you, and so please do like it, share it, and do follow me for such regular updates. And a disclaimer before I end: this is not a trading or investing advice to you. This is a video purely on educational basis, made on the based on the study of Ichimoku multi-time frame analysis. Whatever decision you take regarding your trading investment, please do your study thoroughly, manage your risk, and always respect the support and resistance levels for your decision making. With that, I end. Happy investing, everyone.